Friday. Good morning, Friday. Hope you guys are having a great day. Welcome to today's edition of the DMC. I'm your host, Chuck Fulkerson. We're going to take a look at the markets very quickly, see what's important, what's happening, what's laying for today's markets. Now, on Wednesday, I did a video and I said, is the bear market over? And it was because we had higher swing low and a higher swing high on the daily chart, giving us a little bit of indication of hope. I'm not saying that the bear market is over with completeness. But I will say that on a weekly chart, one of the things to pay very specific attention to today would be how do we show up for the end of the week in volume. Now, notice that so far this week, our volume on our bullish week is higher than it has been the two prior bullish week volumes. Now, so we still have Friday to go from a trading perspective. I would like to see, in a perfect world, to help kind of confirm this, would be having above average volume for the week on this increased move up. That would really help. Now, technically, I don't have a higher swing high yet on the weekly chart. I won't have a higher swing high yet on a weekly chart until about 42.15. But by the time price would get there, it's already moved up considerably in the S&P. So I think it makes sense to start to consider some longer term opportunities in today's market. Now, from a day trading perspective, what am I looking at for today? From a day trading perspective, we've chopped a little bit sideways. After a strong rally up Tuesday, we've chopped sideways the rest of the week. We didn't do a whole lot in the overnight sessions. So I'm going to put a potential breakout above 4,000 as a potential upside breakout trade. There is some long opportunities down below us. I think these hourly levels down here are pretty clean levels, areas that I think are worth getting into if price does indeed retrace. At 39.13 by 39.02, and then there's one at 38.64. So two demand levels down below. The NASDAQ, we're sitting up in a supply level that, frankly, is a pretty good supply level overall. Let me put more time on my chart so we can see it. Where we have a drop-based drop, but we've come into that level, and we've just kind of hovered inside that level, right? More than 6 candles means that it's probably not going to go our direction. So let's remove it at this point. And our assumption is that we will potentially trade higher. Now, unfortunately, I don't have a super clean entry in order to get long if price does indeed come back up. So look for some basing and a bit of a breakout. If you go to a 15-minute chart, and look at some of the movement we had yesterday, you do have this big rally up early in the day. Oops, let me get this back to my automatic scaling. There we go. And so there's a little bit of wick over wick area right here. Could be worth paying attention to and could set up a bear trap opportunity for those of you that are interested in a place to get long on a pullback into this region. This would be what our instructor Herman says is Pepito the Mule. I think that's one of his levels that he would look for, which is basically a breakdown below this area would create a trap, and it would trap all those bears that are getting short below the Globex low. So keep this level in mind for today. Looking at our energies and metals markets, crude oil. Starting with crude oil, we have a little bit of sideways in the last couple of days as we're just kind of hovering right around that 95 level. If I look at this on a daily chart, we have put in higher swing or lower swing highs and lower swing lows. We are on a bit of a falling wedge pattern. Connecting these highs and connecting these lows is a bit of a falling wedge pattern. And so with a falling wedge pattern, you actually anticipate it once it reaches a quality demand area to give you a pretty strong bounce. We don't really have anything super great to lean on as of yet. So looking at this on the smaller time frame, say the 1 hour chart, we did bounce off this area of demand, got a really nice move away, hit this area of supply and then got a little move away. And so now both of those levels are DTM, dead to me. But this area here, the bottom of that demand area, we hit twice. So a third time would make a really nice potential breakdown trade from that level. Now, looking at this on the actual front month contract that we are trading, which would be the CLU, that price point, you can see where it's hit a couple of times. You do have a little demand area here, but that's a retest of this area here to the left. So I think with enough basing, I still need about 3 candles worth of basing, you could have a good breakdown opportunity. Without that, look to this area right up here for a potential reversal trade. Gold, we did break out of our gold little triangle, got a nice little move away, and then have rallied right back up into a supply area. So we're coming into a pretty good area of supply right now. But a little bit of basing here in front of the level means that your target is going to be right here. So it gives you a very small window of opportunity, but you can take that for a little 2-to-1 reward to risk setup if you want to, because your opposing demand is pretty close in the scenario. So take it for a 2-to-1 if that's what interests you. Your next best level doesn't come into play until all the way up here. You could theoretically have, if we base up there, you could have a breakout trade above here. So I would actually look for a potential upside breakout on this as we're gaining a bit of strength and momentum. Looking very quickly at our euro level. So looking here at the euro, we did come back into this area yesterday morning, got a little move away, and then kind of stalled out, telling us, hey, this trade's probably going to no longer work. And so you may have gotten a nice little move out of that level for a few points, but in reality, it looks now as though we are more likely to get a breakdown below this region here with some basing intact. Look for a breakdown below this 101 area. All right, well, that's all I have for today, everybody. If you guys have any questions, shoot me an email, support@tradersarmy.com. Until tomorrow, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.